Euro to US dollar weekly forecast, navigating speculative reversals. The Euro/USD's rollercoaster ride reveals a market trapped between political storms and economic uncertainty, but can traders navigate this chaos? Since peaking near 1.18400 on July 1, the currency pair has plunged sharply, with day traders scrambling to catch oversold bounces. Yet the fundamental outlook grew murkier last week. A surge toward 1.17225 collapsed within hours, crashing to 1.16200 as institutional nerves frayed. This volatility isn't random, it's fueled by the White House's public feud with the Federal Reserve and unanswered questions about global trade. Here's the controversial part: should central banks like the ECB, meeting this week, and Fed prioritize economic data or political pressure when setting policy? Jerome Powell insists the US economy faces uncertainty, but President Trump demands rate cuts now, a clash that's ripped market stability apart. Technically, Euro to US dollar now trades stubbornly below 1.17000, suggesting bears control the short-term narrative. But don't dismiss the bigger picture. 3-month charts still show a bullish trend, hinting that financial giants still bet on the weaker US dollar ahead. Mixed US data, strong retail sales versus tame inflation, adds fuel to this fire. If inflation stays low, expect louder White House demands for cuts. Yet here's what most traders miss: needing Euro to US dollar higher doesn't mean it will rise when political crosswinds intensify. Volatility will explode this week. The ECB's cautious stance, no rate change expected, could clash with Trump's tariff rhetoric, while the Fed meeting looms. Oversold conditions near 1.16000 may tempt bulls, but breaking below sustainably would signal extreme risk aversion. Day traders, beware. This isn't a market for hunches, it demands ironclad risk management. New lows could trigger buy-the-dip panic, but is that wisdom or folly? What's your take? Will Powell defy Trump and hold rates, or will politics trump economics? Share your view below. Euros at a tipping point, trends and technical analysis. The Euros is at a critical crossroads. A single decisive move now could determine its trajectory for months to come. But here's where it gets controversial: is this just a temporary profit-taking dip or the start of a major reversal? Let's unpack what every trader needs to know about this pivotal moment. Throughout 2025, the world's most traded currency pair has delivered thrilling action, soaring from 1.02 to 1.18 in just 7 months, its highest level since 2021. This explosive rally wasn't random. Earlier this year, geopolitical tensions stemming from the Trump administration's policies unexpectedly revived discussions about Eurozone unification. When Germany and other member nations announced substantial deals, it ignited massive euro buying. Combine this with dwindling confidence in US leadership triggering dollar sell-offs, and you had the perfect storm that propelled the euro 15% upward at its peak. But markets never move in straight lines forever. Recent sessions show traders locking in gains, forming what appears to be temporary highs. Now comes the critical question: have the underlying flows truly reversed direction? Our multi-time frame technical analysis offers clues. First, the daily chart reveals a fascinating story. After consolidation during the Israel-Iran conflict, we witnessed 7 consecutive bullish candles rocket prices from 1.1450 to 1.1830. However, the tide turned sharply around July 1. Nearly every session since has closed lower, erasing most war-related gains. Crucially, momentum has dipped below its midline, a yellow flag for bulls. To confirm bear control, we need a decisive break below the 50-day moving average. Key levels to watch. Resistance, 1.16 to 1.1650, current pivot, 1.18, 2025 high, 1.20, major 2021 barrier. Support, 1.15, 50 DMA confluence, 1.12 to 1.13, primary floor, 1.1066, last major upside pivot. Zooming into the 4-hour chart exposes a structured downtrend channel. Prices have descended steadily but are now hitting oversold territory, causing the decline to stall. Here's what most traders miss: the pair is squeezed between the 50-period and 200-period moving averages. Buyers recently defended the 1.16 support amid Syria war headlines, but any sustained break below the 200 MA would signal accelerating bearish momentum. Conversely, a rebound faces stiff resistance at 1.1620 to 1.1650 before challenging the 50 MA near 1.1678. On the hourly chart, today's session opened with a promising double bottom pattern at 1.1560, the lower boundary of our 1.16 support zone. But here's the catch: buyers must break back into the downtrend channel to prevent further downside. Watch reactions at the channel's lower trend line, the 50-period MA, and the 1.1650 pivot closely. So we arrive at the million-dollar question: is this correction a buying opportunity or the calm before a bearish storm? Some argue the fundamental drivers remain euro positive, while others see technical damage signaling deeper losses. What's your view? Will bulls defend 1.15 and charge higher, or will bears break support and target 1.12? Drop your analysis in the comments. Safe trading. Asterisk disclaimer: views expressed belong solely to the author and not necessarily to OANDA Business Information and Services Incorporated or affiliates. This content is educational only. Reproduction terms: https://www.marketpulse.com/terms-of-use/. Visit https://www.marketpulse.com for global market insights. Copyright 2025 OANDA Business Information and Services Inc. About Elio Manner. With over 7 years in financial markets, Elio brings deep expertise in geopolitical and technical analysis. Since 2018, he's actively traded while dissecting how breaking news and economic data move markets. His background includes fixed income trading at the Montreal Exchange, and he now provides integrated market perspectives by connecting political events, sentiment shifts, and technical patterns. Elio's passion lies in demystifying complex market dynamics for traders of all levels. Euro to US dollar forecast: will the euro bounce back from 1.1625? Tariff tensions weigh in. The euro to US dollar currency pair is teetering on the edge of a cliff, and the next move could change everything. While it's clinging to the 1.1625 support zone, don't be fooled, the storm isn't over yet. Here's what's really driving this volatile dance. The euro's inability to build momentum after last week's minor rebound from multi-year lows is a red flag. Trade tensions, particularly rumors of a potential 15 to 20% US tariff on the EU even with a deal, are handcuffing the euro. Meanwhile, uncertainty over the Fed's rate cut timeline is keeping the USD in limbo, creating a tug-of-war that's leaving investors bewildered. Technically, the 4-hour chart reveals a bearish setup. Last week's failure to break the 100-period SMA, a key trend indicator, turned it into a roadblock, triggering bearish momentum. However, neutral daily oscillators, think of them as emotional gauges for traders, are flashing caution signals. Don't bet on a free fall just yet. For the bears to regain control, prices need to shatter the 1.1560 multi-week low. If that happens, expect a plunge to 1.1500, then 1.1450, and potentially a catastrophic drop to 1.1400. On the flip side, bulls face an uphill battle. The 1.1670 swing high and 1.1700 psychological barrier are immediate hurdles. A surprise breakout above 1.1700 could spark a short covering rally, pushing prices toward 1.1745, 1.1800, or even the September 2021 highs near 1.1830. But here's where it gets controversial. Are tariffs really the solution, or a recipe for disaster? Tariffs 101. These customs duties on imports, like EU goods, aim to protect US producers but often backfire. Trump's plan to levy 15 to 20% on the EU, even with a trade deal, risks escalating a trade war. Economists are split. Some see tariffs as a necessary evil to fix imbalances, while others warn they'll hike prices and spark retaliation. With the US relying heavily on imports from Mexico, China, and Canada, 42% of total imports in 2024, Trump's tariff strategy could either save American jobs or trigger economic chaos. The big question: will the euro to US dollar finally collapse, or is this the calm before a bullish storm? Share your predictions. Do you think tariffs will save the US economy or push the world into a trade abyss? Disclaimer: this analysis is for informational purposes only and does not constitute investment advice. Trading carries significant risk, including total loss of capital. The views expressed do not reflect FactStreet's official position. Past performance is not indicative of future results.